I'd like to extend a warm welcome to you all. Thank you so much for attending today's presentation. My name is Avril Craig, and I'm the Payroll Director here at Henderson Loggie. My co-presenter today is Richy McPhee. He's one of our tax managers, and he is Henderson Loggie's P11D and Employee Benefits Specialist. Now, between us, we've got decades of experience in this field, so we're hoping to help you navigate your way through this change to the legislation on reporting benefits. So today we're going to cover the topic of mandatory payrolling benefits in kind. I'd like to hand over to Richy, who's going to go through the agenda with you, and after that we'll both talk you through everything in detail. Over to you, Richy.
Thanks, Avril. So as Avril said, I'll just quickly go over the agenda for today. So we've obviously done the introduction. I will provide a background to benefits in kind. I'll talk about how payrolling benefits are how payrolling benefit is going to change the reporting of benefits in kind. I'll also talk about the fact that there are some exclusions from mandatory payrolling of benefits, what the implications of mandatory payrolling of benefits in kind will mean for employees and employers. I will then pass back to Avril, who will talk about the day-to-day processing and the challenges, and we will finish up with a brief summary and time for a Q&A. If you do have any questions as we're going through, if you just add those questions to the Q&A box on the Zoom function, we will come to that at the end. If we don't manage to get through all the questions from everyone, we'll come back to you separately by email as we have your, provided we have your contact details. So let's give a bit of a background to benefits in kind and P11Ds. So P11Ds were introduced in the early 1960s. It was brought in to essentially capture any non-cash benefit or perk that was provided to employees of a business. The types of benefits that normally get included on P11D are your company cars and company vans. Also, if you're providing any fuel that includes private mileage, that would go on to the P11D. The provision of private medical insurance, again, is another common one that we see going through P11Ds. Gym memberships, again, very common and very popular with employees. So again, that's a common one you tend to see going through P11Ds. Interest-free loans, so if you have some employees that have very expensive annual train passes, that could be something that you provided the employee with to allow them to pay that. But again, there's a limit at which point the interest-free loan has to be reported on the P11D, so not all interest-free loans go on there. And the other one is subscriptions. Now, as many of you will know, there are a lot of exemptions that are in place for subscriptions, but essentially if your subscription is not job related, then chances are it should be going on the P11D, but it may well be that if it is job related and provided that it's on the list 3 on the HMRC website, then it doesn't need to go on your P11D. As you may or may not know, the P11D and the P11D is submitted to HMRC after the end of the tax year, which runs from the 6th of April to the 5th of April. It's submitted to HMRC by the 6th of July, following the end of that tax year. And if you have any Class 1A national insurance, which is essentially employer NIC, that gets paid over to HMRC by the 19th of July. Obviously, if you're paying electronically, you do get that extra 3 days, so it's actually the 22nd. And whenever an employee has a benefit that was reported on their P11D, once the revenue processed that P11D, an adjustment to that employee's coding notice was brought in to a later year to kind of ensure that they were taxed as they went on going forward. So what changed? So in April 2016, the UK government brought in the voluntary payrolling of benefits in kind. That allowed employers to, rather than doing P11Ds, they would just payroll the benefit. They had to register for payrolling benefits in kind before the start of a tax year. So as things stand, if you want to payroll your benefits, you must register the intention to do this with HMRC before the 6th of April 2025. Where you are voluntarily payrolling your benefits in kind, you still have to submit a P11DB to HMRC, and that submission deadline is still the 6th of July. And you still have to make the payment of Class 1A NIC by the 19th of July. But while the employee doesn't get a P11D, and that's the big difference when you're payrolling benefit, is the employee no longer gets a P11D, you still have to provide the employee with a summary of the benefits that have been payrolled throughout the year. From the 6th of April 2026, however, all employers must payroll their benefits in kind that they provide to staff. There are two exceptions to that, which I will come on to later, but essentially for the majority of employers, they will all be required to report their benefits in kind to provide to staff via payrolling benefits. As a result, the final year that employers will be able to do P11Ds is the year ended 5th of April 2026. And so the final time they will be submitting P11D, with some exceptions, is the 6th of July 2026, and then obviously making the Class 1A NIC payment on the 19th of July. So what are the implications of payrolling benefits, the mandatory payrolling benefits? So essentially, there'll be no longer a requirement to do P11Ds, unless there are those two exceptions that I'll come on to. The Class 1A will be collected monthly rather than annually. So essentially, employers no longer need to submit P11DBs going forward, because all of the Class 1A will be collected each month or each week, depending on how frequent your payroll is. One big positive is there will be no more requirement to submit the P46 car forms for employees who are receiving company cars, because you're essentially picking that car up via payroll each week, each month, each 4-weekly payroll run. So you no longer need to submit the P46 car forms. One of the big differences is obviously that when you were doing P11Ds, it was a look back over the previous 12 months, where you then reported all of the benefits that you provided to your staff over the course of that 12-month period. It was obviously an annual exercise. Payrolling or mandatory payrolling of benefits will actually be a look back or look forward over the current month or week or 4-weekly period to actually report what benefits are being reported. The challenge will obviously be, and we'll come on to that, will be the collation of information. And essentially what you're looking at is, if you're doing your payroll partway through the month, for the end of the month, you have to then look forward to see, well, what is the benefit going to be for that remaining days for that individual employee? As I said, whereas P11Ds were an annual exercise that employers needed to do and submit to HMRC, payrolling of benefits will be either monthly, weekly, 4-weekly, or if you do an irregular payroll, essentially whenever you run a payroll, if you provide a benefit in kind to one of your employees, you will need to do calculations of the benefit to include that on the that employee's payslip and tax it accordingly. There will be a transition in the first year of payrolling benefits for all employers. And essentially what that will mean is that for current employees who already receive benefits, you will essentially have to do your calculation of the payrolling benefits that are going to be payrolled post 6th of April before you run the first payroll for that month. Essentially, so if you have a company car in the previous tax year, you're going to have to calculate what that benefit is for the coming tax year and report that on a prorated basis going forward in the following tax year. As I said, if the pay period is a weekly pay period, you would prorate the annual benefit over the course of that particular pay period. For new employees or employees who are receiving a benefit for the first time, what employers will need to do is calculate the benefit before they make the payment of the salary, so that that is included on that individual's payslip. And what I would say is it's very important that you have a system in place to capture all the benefits that you provide to your staff that need to be payrolled, because although this is becoming mandatory from the 6th of April 2026, HMRC are expecting high levels of accuracy from day one as soon as you start operating it. So one of the big pluses for the employee is that they are taxed in real time when their payrolling benefits are operated. Essentially, that means that they won't get any large unexpected tax bills. For example, if they got a car partway through the year under P11Ds, the employee may not have been expecting, and a P40, if they got a car partway through the year and the P46 car form was not submitted online, the revenue didn't update that employee's coding notice, so they got potentially a large tax bill at the end of the year that was due for payment. Payrolling benefits gets rid of that because you're essentially taxed in real time, and there's no longer any demand notices for things like that. As I said, because all your benefits are being payrolled, the adjustments that are going through employees' coding notice will also be greatly reduced. They won't be fully eliminated because some adjustments that go through coding notice don't relate to benefits. For example, some employees may have gift aid going through there. They may have pension contributions going through there. They may also have rental income that they have in addition to their salary that the revenue have put an adjustment through their coding notice for. So it won't eliminate any adjustments to the coding notice, but it will greatly reduce them going forward. As I've said before, you will be reporting, although I've said monthly here, you essentially are reporting any benefits that you provide to employees whenever you run a payroll. So if you run a weekly payroll, you will be reporting that benefit in kind weekly. If you do monthly, it'll be monthly. If you do 4 weekly, and so on. Anytime that you make a change to an employee's benefit in kind that you provide, you will need to recalculate what the value of that benefit is. So that does potentially add an extra challenge on to running the payrolling benefits. If you don't make if you don't have the correct amount going through the employee's payslip in 1 month, because, for example, the value of the benefit was miscalculated, you can pick up that adjustment in the following month, provided that following month is within the same tax year. If it's out with the tax year, you have to go back and amend the your FPS return. An end of year process will be introduced going forward to amend taxable values that cannot be determined during the tax year. But the revenue have not confirmed what that process will be as yet, because ultimately mandatory payrolling of benefits doesn't come in until the 6th of April 2026. And as I say, so the revenue will provide further details on how those corrections will be reflected and how you go about doing that in due course. One of the points that employers should be aware of when they're advising their employees is that there is the potential that the first year that you operate payrolling benefits could result in a double dip of tax being deducted. And I will give an example of how that could happen in a later slide. There is no confirmation from HMRC as yet as to how mandatory payrolling of benefits will link with the 50% tax limit. And for those of you who don't know, the 50% tax limit essentially means that employees cannot pay more than 50% tax on their gross salary in any given week, month, 4-week period. Now, in the past, how that was dealt with is where you had employees who had benefits, but also maybe a low salary. You could essentially just remove that person. If you were already voluntary payrolling benefits, you would just remove them from that that system, and then you would just submit a P11D for that person, or you would carry forward any tax that was due that wasn't collected in that month to a later month. Obviously, once you get to the end of the tax year, if there was still an outstanding amount of tax that was due, the revenue would just issue, I'm going to call it a demand notice for the unpaid tax to the employee, and then the employee would be required to settle the tax themselves that way. Given that there's been no confirmation on how mandatory payrolling of benefits will link with the 50% tax limit, my suspicion is that essentially the revenue will just issue demand notices if there's any unpaid tax in later years. They're just going to go straight to the last kind of option that they had. So I talked earlier that there could be a double dip of tax paid in any given month as a result of mandatory payrolling of benefits. And how that would essentially work itself is, say you had an employee who had a benefit in 2025, but not in the previous year. That benefit had a value of 1,200, and the individual was an intermediate taxpayer, so pays tax 21%. Tax payable is 252. What essentially happens is that if that person had a salary of 30,000, before the mandatory payrolling of benefits come in, he would have a salary of 2,500, and there would be an adjustment to his coding notice to pick up the tax that was due. The amount that he would essentially be taxed on is 2,600 rather than 2,500. With mandatory payrolling of benefits, he still owes that the tax that was due for the earlier year, but it's a real-time collection of tax for that individual. So going forward, he will actually be taxed on 2,700. I'm just assuming that the value of the benefit doesn't change year on year in this example. So you go from being the employee in this example is being taxed on first before payrolling benefits, he's taxed on 2,600. But actually, once mandatory payrolling of benefits comes in, he's being taxed, he or she is being taxed on 2,700. Essentially, it will all come out in the wash, but the first year will have that potential for a double dip. As I said, that before, there are some exceptions to mandatory payrolling of benefits. And those exceptions are accommodation and low interest loans. And the reason that they are exempted from the mandatory payrolling of benefits is because they are linked to HMRC's official rate of interest, which previously was done annually, but the revenue are updating that more regularly now to the point where, while not mandatory to payroll these benefits, you do have the option from the 5th from the 6th of April 2025 to voluntarily payroll these benefits. However, because the rates of interest change so regularly, I think my view is that the revenue are expecting that employers will not payroll these benefits until they become mandatory. The revenue have stated that they do want to bring these into mandatory payrolling of benefits in due course, but they are not at the point where they feel that that would be doable for employers at present. So they're not making it mandatory as part of the other benefits that are being mandatory payrolled from the 6th of April 2026. So as we see it, there are some challenges, just from what I've talked about. The first one being the administrative burden for employers and payroll providers, because essentially you're going from a one-off annual report detailing all the benefits to potentially 52 reports detailing all the benefits if you're doing a weekly payroll, or 12 if you're doing monthly. I'm sure Avril will talk about this more as we go on. But for the employer and the payroll providers, there is an admin burden there. You could have complex valuation benefits. You could have complex benefit valuation calculations. That tends to happen when you've got people starting and leaving, or if you've got people who are reimbursing some of the benefit, private medical being one of them. You could also have a situation where employees are actually resistant to the fact that their benefit is going to be payrolled in real time rather than getting the P11D, which, you know, if you've had an employee who's been with you for 10, 12, 20 years and they've had a P11D every year, to suddenly not getting a P11D, but just getting an adjustment going through their pay, they may be, you know, they may actually be resistant to that fact, which is where communication will be key. And the other problem, or challenge I should say, is that your systems will obviously need to be upgraded to account for the fact that payrolling benefits is becoming mandatory from 2026. The software, the information that will need to be reported to HMRC, they have already said will be greater than what it is currently. But they've not said how much extra information they will need as part of this. And they have stated that they intend to provide the software providers with details of the additional information that's required as a result of mandatory payrolling of benefits by the mid to late 2025. So potentially late 2025 could mean December 2025, which doesn't give the software providers that long to actually get the software fully up to scratch. But I'm sure they're all working on it behind the scenes, but it doesn't give them a long to kind of get that last parts across the hurdle. So that's what I wanted to kind of just run over quickly. I'll now pass back to my colleague Avril, who will take you on the next part of the presentation.
Thanks, Richie. Just give me 2 seconds and I'll get my screen sharing sorted out. You see that okay? Right.
Yep.
Thank you very much. That's always reassuring to know. So Richie has painted a really clear picture of where we are now with benefit reporting and what the future requirements of benefit reporting look like. So thanks for that, Richie. And I know there's a lot for everyone to take in here. So what I would like to talk about is really the practicalities of your day-to-day operations to capture, to be able to process this new reporting requirement. How do you get from your current system of benefit reporting over to the new system, and how do we do that as smoothly as possible? Now, Richie's mentioned the administrative burden. There's definitely no avoiding this. You'll be looking at benefit calculations let's say you've got a monthly payroll, you'll be looking at benefit calculations 12 times a year rather than a once a year look back exercise. And not only that, your processes are going to be tied to payroll deadlines, which we all know payday is payday and payroll deadlines are hard deadlines. So there's a bit of discipline involved in there in getting this process done. So I'm recognising that today's audience is a mix of people who operate their payroll in-house, and there's P11D teams who operate in-house, and there's clients who outsource one or both of these functions to HL, or maybe even another service provider. The guidance and information that we're providing today applies to everyone equally. There's really no exemptions. So, the administrative burden. Since benefit calculations are now happening, as I say, every payday, some of the calculations can become a bit complex, and there may be strands of data that make up benefit data across your organisation, and they need to be gathered up to allow you to make these calculations. So just some examples. Let's look at how this data gathering can become a bit complex. And this is really all food for thought for you, so that you can start to think about, how can I get this to work effectively in my organisation? So we've got to think about scenarios where someone's changed their car in the middle of the, maybe it's the middle of the month. So the person who's doing the benefit calculations needs up-to-date information on this. As soon as it happens, they need to know so that they can do the calculations. And there needs to be time allowed for these calculations too. That's what we mean about the administrative burden. It's more work. It's 12 times a year you're looking at this. So how do you effectively make sure that you've got all this information about changed benefits in time? And have you got the time to do recalculations, which effectively is what you need to do every month? There could be situations where an employee is making good a benefit. So they're contributing something towards a benefit. So what if their contribution changes at some point? Again, you need to be able to know that your system picks up that information and draws it in to the person who's doing the benefit calculations. You've got to think about timing. You've got people starting. There might be, to say payroll cut-off is the 20th. That's when all the data goes to payroll for processing. You need to know who started in that month and have they got any benefits? How much is it? It's all about timing. There might be new benefits arising as well. Let's say you provide private medical insurance and you've decided to add dental care onto that. Your people who organise this need to know that they have to convey that information to the folk that are calculating the benefits on a monthly basis. Changes to how much benefit is provided to an employee. Maybe someone's increased their PMI to include family cover. Another scenarios where someone has maybe stalled their benefit. Let's say they get a company car and for whatever reason, they're not going to have that car for a month or two. That again changes their taxable benefit in that particular month, whereas it used to be at the end of the year, you did a look back and calculated this. So I'm trying to paint a picture here to let you see that all of this needs to be collated and calculated for the month in real time and ahead of the payroll data, so that these values that you then calculate, the benefit values, can then be conveyed to payroll so that they can process that along with all the other pay components. All of this that I've been discussing here points to one thing. You need a robust data capturing system and great communication system. And you need this to be timetabled as well, in line with the payroll process. And, there's little quirky things like, think about December payroll. That's always done really early in the month. So you need to make allowances for that to make sure that the work's done in time for that. So lots of work and lots of collaboration is needed between your benefit teams and just all the areas of the organisation that contribute information and data to this. So let's talk about integrating these services. What I mean by that is previously payroll and P11D were linked, but essentially they're two separate tasks. But now they're going to be part of the same process. So these two services need to be blended into one monthly service. The data needs to be captured in full to allow the benefits to be calculated for the year and then converted into a monthly value. And then it has to be revisited every month for changes. This monthly value gets reported on payroll, and their tax is collected from the employee, and the employer Class 1A NIC is calculated too. And that'll form part of the P32 total that you're paying to HMRC. Up until, next year, year ending 5th April 26 is still in the voluntary arena. So the Class 1A is still going to be done on an annual basis for that year, but thereafter, when we're in the mandatory time, it's going to be calculated every month. So what do you need to do? This isn't just down to just payroll people or just P11D people. There needs to be a joint project to get all your systems aligned. So look at who does payroll and who does P11Ds currently. If you're lucky, it might be the same team, and maybe that transition will be a little bit easier, but there still needs to be a system to capture the data in time. I'm just asking people to not be complacent about this and really get systems in place now. There's different scenarios for each organisation. Perhaps you outsource your payroll and P11D is done in-house, or perhaps P11D is done in-house and payroll's outsourced. So how do you go about linking up these two services? We've got clients that we service their payroll and their P11D, so we've got a plan in place to help them. So whether it's all outsourced, partly outsourced, all in-house, planning is needed to get a system that's going to flow that information on benefits to be calculated and then presented to payroll for processing. I've mentioned deadlines, and Richy's mentioned deadlines quite a few times. So again, looking at monthly payroll, you're soon going to have 12 hard deadlines for benefits rather than one annual one. April 2026 might seem far away, but we all know how time passes. And being realistic, your service provider, whether it's HL, whether it's another service provider, or whether it's all in-house, the dangers of leaving it to the last minute are great. Service providers are not going to have the capacity to migrate everyone onto a new system at the last minute. So we've thought about this, and what we are encouraging everyone to do is to consider commencing payroll benefits in April 2025 while it's still voluntary. So that means you register now with HMRC. This might be a good idea, especially if your payroll benefits are a bit less complicated, so the transition would be easier. If you need to register with HMRC, that's something we can help you with. Again, start planning. Plan to get your payroll and benefits reporting, data capture and reporting aligned. Even if you've decided you want to start in April 2026, why don't you get the data capture and reporting systems in place now? And that way they're going to be tried and tested, and they're going to be good to go in April 2026. It's going to take the pressure off you for all this last minute panic, really. One thing I wanted to note is these changes apply to all payrolls of all sizes, and that includes the little 1 or 2 director company payrolls. Quite often these payrolls churn away in the background. They've got a regular salary and there's very little need for input during the year. But actually that's going to change. Your input's going to be needed. If you change your company car, you increase your medical benefit, that needs to be reported to whoever is calculating your benefits and reported through payroll every month. So it needs to be visited every time there's a payday. What about payroll software? This is mostly directed to the non-Henderson Loggie payroll clients, because our systems, we know what our systems are going to do in terms of this. But you need to be sure that your payroll software will have the required capability for reporting payroll benefits. I believe most of them will, but there are a few quirky ones that are maybe legacy systems that just might not be up to scratch. So it's worth checking that out as soon as you can. Richie's mentioned this, but software developers are working in the background, doing what they can with the information that they already have, and they will make sure that everything's in place ahead of the mandatory deadline. There's things like additional FPS fields are going to be required, and your system will need to produce what, you know, the details are still sketchy, but imagine it'll look like your employees will get a P60 and a benefit statement at the end of the year. I just want to raise a word of caution again for in-house payrolls. Now, my understanding is that some of the softwares are going to have inbuilt links to HMRC benefit calculators, just to enable this benefit to be calculated along with the payroll process. So for those of you that are running in-house payroll, I just want you to be cautious, because the reliance on using these calculators could be risky. We have seen the HMRC calculators make errors in the past. Our teams here that do these calculations use the calculators and check it, you know, applying the rules. They check it manually just to make sure all the parameters are correct. But if you're relying on these calculators, there's potential for error. Maybe you've got someone on your payroll team who is proficient in payroll, knows it inside out, but maybe their knowledge on payroll benefits is a bit limited, on benefit calculation is limited. So it could be quite easy for these calculations to go wrong if there's not a check and verify process in place and just relying on what the computer says. So it's essential that adequate knowledge of calculating benefits is present in the people that are making the calculations. If your payroll team are going to be taking on this task, they need to be trained and they need to have good quality training. The right knowledge for this task is essential. Within Henderson Loggie and the clients that we service, we're leaving all the benefit calculation part of the process to the tax experts. That's Richie and his team. So maybe your payroll team already has adequate knowledge and understanding of the current system, and that's great. There's no reason why it can't be handled by them, as long as that knowledge and understanding is there. It might even be that your benefit that you provide is very simple. And again, that's probably okay, but maybe you need to risk assess that process to make sure that you're happy with who's handling this. I want to talk now about employee communication, and I really can't stress enough the importance of this topic. This is probably directed to the HR people more than anybody else. This is a seismic change for your employees too. And these changes need to be explained clearly to them, especially the scenario that Richie pointed out in the transitional year where there's potentially a double hit of tax. Your employees, it's not going to affect everybody, but it's going to affect some. And your employees need to know, why am I suddenly paying extra tax? They need to understand this. They need to know how, you know, post-migration, how's it going to affect their tax code, and how can I be sure my tax code's correct? So there may be a bit of education there in how to read your tax code notice and make sure that any restrictions on it are correct. Do your employees have access to their online PAYE account? That would be a really good thing to help them to link up to that so they can see everything that's there. Another good way of communicating this is maybe you can show your employees examples of what their payslip's going to look like post-migration. and explain to them how the numbers work. Employees, when there's change, and I remember this clearly with auto-enrolment, employees are often and understandably very sceptical when it comes to change. They're going to have questions, they need to understand, they need lots of reassurance and confidence that everything is running correctly. So maybe you could do things like facilitate a Q&A session, have a drop-in clinic, create a training video, whatever you think works best for your employee base. Essentially, I'm just saying be transparent, give clarity and give reassurance. And if nothing else, it's going to cut down the level of queries that you have in month 1 of this going live. So let's summarise. Mandatory payrolling benefits in April 2026 are happening, and P11Ds will largely be a thing of the past, apart from a few exceptional cases. We're urging you to consider getting ahead of this and start in 2025, or at the very least, get your systems and data capture processes and communication lines and procedures in place so that you're ready and good to go in April 2026. If you're going to start in 2025, remember that you have to register before the 6th of April 2025. That's done through your online account. If we're your payroll agents, we can do that for you. And we've said it many times, but please don't leave it to the last minute. Start thinking about your systems and make sure that you're able to capture all the accurate benefit data so that the calculations are spot on. Make a plan to bring your payroll and benefits functions together. Make communicating with your employees a priority. And, you know, that communication doesn't have to be just one email or something. Maybe it needs to be a series of emails, videos, Q&A sessions, updates, just to help guide them through this as well, because it's a big change for them. There are still some unknowns. You know, one example of this is we are not entirely sure what's going to happen if somebody, let's say someone's on maternity and they're in the zero pay phase of that maternity and they're getting a benefit. What happens with the tax? It's not being collected. So there are more updates to come. You can watch HMRC's website for updates on this. But what I can tell you is on our website, we will be keeping, probably quarterly, we will be keeping you up to date on this topic as and when changes arise. So what I'm going to do now is ask Richy to give us some final thoughts, and then we'll go and look at some questions and see if we can answer these for you.
Thanks, Avril. I'll just try and share my screen too. Sorry. 1 second. Sorry. IT is not playing ball with me at this precise moment in time. Of course it's done that. Sorry about this. Always happens. Yeah, so just to kind of go over what we talked about, essentially start planning now to avoid any last minute challenges. Collaboration and staff training will be key on this, as well as any communication that you have with staff, because they're the ones who are essentially the ones that are going to be really affected by this. We, Henderson Loggie, are here to help and support you through the transition. If you do have any questions, by all means, get in touch with us. Our contact details are on these slides that will be provided at the end of this just now. And if I can just go into the questions. So we've had a question. We pay mileage rates on a company car using higher than HMRC and report that on the P11D. Will this still need to be registered ahead? Yes, essentially is the quick answer. You're obviously collecting or paying the Class 1 NIC via payroll on those payments above the advisory fuel rates. As normal, you'll just essentially have to register to account for any payments over and above the amount that would previously be reported on the P11D. So essentially, if it was previously on a P11D, it has to go be dealt with via payrolling benefits going forward. That's the quick answer. Happy to have a kind of follow if there's anything you wanted to ask on that as well. Next question, what happens where the cost of the annual benefit renews at partway through the year? So cannot be determined at the start of the year. So this is where I talked about the fact that you're essentially prorating the benefit. So if your policy starts on, let's say, September, and it lasts for a year, for the first 6 months, the benefit that will be reported will be a prorated 6 month of that previous year benefit. And then when the new benefit, when the new policy comes in with the updated annuity rates for each individual employee, then you'll redo your calculation based on the new rate, and then you'll prorate that over the remaining number of months in any given tax year. So essentially, you prorate 6 months if it changes in September, or let's make sure I got my months right. You'd essentially do 6 months at the previous rate and 6 months of the new rate as you kind of go forward. Next question. I have a director who isn't paid salary but gets a company car. Would this be exempt under the 50% rule? And would I need to submit the annual statement? So my understanding, again, it's the revenue haven't kind of clarified this point, but my understanding is no, you would still be required to report that via payroll, via payrolling benefits. But essentially, as the director, or in most cases, the director has to submit an annual return, an annual personal tax return, as I understand it. That's how the tax will be collected. But essentially, there are no exceptions just for things in that example there of a salary with a director with no salary but a company car, that you essentially just submit the you essentially payroll the benefit that person gets. But again, the revenue have not actually clarified their position on this, so my understanding could be incorrect in that example, but that is my understanding of how it's going to work, that you will just payroll that benefit and then that director will get a demand notice after the end of the year, or they'll pay it as part of their self-assessment. Next question, do you need to register each year or just once? Just once. So once you're registered, that's you. You're on the revenue system, and you don't have to redo your registration each year. Once you're in, because of it becoming mandatory, you're not out, you can't come out. So yeah, it's just a one-off registration. If you provide no benefits to staff, do you need to register? No, because there is nothing to report. So there's no need to register for payrolling or benefits. And again, this will become mandatory. So whether or not you need to register, I'm not entirely clear post 6th of April, because it is mandatory. And will the revenues have it as a, will the payroll provider essentially have it as an extra in there that you don't need to do? But yeah, don't have to register if you're not providing benefits. What about business travel expenses where they are given purely for business purposes? Do they need to be reported, and how will they be taxed? No. So if the travel expenses are entirely business related and is not just normal commute, the same tax rules apply now, or the same tax rules will apply for payrolling benefits as they do for P11Ds. So if it's not a benefit under the P11D rules, it's not a benefit under the payrolling benefits purposes. So yeah, in that instance, as I say, there's no need to payroll those costs. So, hi, can I just check? The company currently provides several benefits, but the employer covers the tax payable by the employees. Will this still be possible? So that is referring to what's known as a PAYE settlement agreement, or also known as a PSA. And PSAs are not affected by the payrolling of benefits legislation. So if you're doing a PSA for your employees to cover the tax and obviously the grossed up NIC, you'll still do that as normal. That's not being affected currently. I don't think there's any plans for the revenue to change that, but watch the space. But yes, essentially to answer that question, no, that PSA is not affected by payrolling benefits. For the double hit of taxes in the first year, does this mean that the previous year's tax due from the benefit in kind will be taken monthly along with the current benefit in kind tax for the month they receive the benefit? Yeah, that's right. Essentially, the tax that was due for an earlier year. Now, I know in my example I used the previous year, but in reality, normally when the revenue have unpaid tax from an earlier year going through the coding notice, normally relates to 2 or 3 years previous rather than the previous year, because obviously that individual could have other circumstances that mean they have more tax than just the benefit that was previously unknown to them. So essentially what will happen is that the unpaid tax from the earlier year will be split over 12 months, and they'll pay the tax over that annual period, and then they'll also pay the tax on the benefit in kind that they've had in the year. So yeah, that's where the double dip kind of comes in. When are Henderson Loggie looking to enroll their clients, 25 or 26? It's coming. So it really depends on your own circumstances, but we would recommend that certainly for the easier ones. I think, Avril, we're recommending that you kind of look to get ahead of this before the 2026 deadline, because you don't want to leave it till the last minute. Yeah, it depends on circumstances. I don't know, Avril, if you want to say any more on that.
Yeah, I agree. It depends on circumstances, and really would be happy to have a conversation with you to assess your own circumstances and help you to come to a landing on what's best. We think the sooner the better for most people. It's not always right, but yeah, happy to have a chat about it and see. It's an individual decision, so happy to talk it through with you and see what would be best.
Is the registration for each employee, or is it company-wide? It's company-wide. So you do the registration for your entire set of employees, basically. So if you've got 100 employees, then you just register for payroll and benefits once, but then obviously you have to payroll those benefits for those 100 employees going forward. What if you give an allowance for clothes that are tax tabbed to employees? Would this be affected? So I'm not sure if that's the clothing allowance. So if you give a clothing allowance to employees, if there are some exemptions for certain industries, and if you're within that industry, then that doesn't go on the P11D, and as it doesn't go on the P11D, you don't have to payroll it. If you give a clothing allowance to your employees for any other that isn't exempt, essentially that should just be going through payroll, because it's essentially additional cash that the employees are getting. That's my understanding. I'm not sure if that answers your question.
we can follow that up.
But we
if
can
you want
follow
to
it up
want to
if
ask,
you want to email us, and if it didn't answer your question, happy to kind of follow up on that if my answer didn't.
yeah. I think there's actually still quite a few questions coming through. Lots of questions. It shows you what a hot topic this is. So for apologies if there's some of them we've not got to. We'll answer you directly and have a chat and hopefully give you the answer to the question that that you're looking for. But as I say, we'd be here till mid-afternoon going through all these.
Yeah.
So maybe we better draw a line under it there, and promise you we'll follow up with any questions that we've not managed to get through. We're already running over time and we'll be getting ready for your lunch now. So I think we'll probably just wrap up there, Richie.
Yep, that sounds good.
Yeah. So none else to say really, other than thank you so much for attending. Keep an eye on our website. We'll keep you up to date with changes as they arise. If you're engaged with us for payroll and P11D, we will be having conversations with you to see how you want to do this. But if you don't want to wait for that, then get in touch directly and we'll just move it forward for you. You're always here if you need us. You've got our contact details, and as I say, watch our website and we'll give you some updates as they come along. So call it quits there. Thank you very much. And
thank you, everyone.
we'll speak to you soon. Thank you. Bye-bye.
Thank you. Bye.